Hello viewers, so welcome to my channel. I'm Hasham. Last video I have explained you about the theory of capital gain. Now in this video I'm going to start the problems on capital gain. So problems are very simple. Few provisions are there compared to other heads. So concentrate more so that confidently you can write in examination. The problems are dependent on theory. So don't ignore the theory. Watch the first video of theory. Otherwise, you can watch the last year's videos also. Assessment year 23-24, I have already uploaded. Go to the playlist of my channel. Select the subject income tax for the assessment year 23-24. Take out the video of capital gain theory. Watch the full video. Complete explanation I have given in the last year's video. This year's video very briefly I have explained. Because time is very short, we have to do a lot of other problems on other heads. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep ready the problem, then you start watching the problems. Take the screenshot of the first few problems, then I'll explain. Come on, see the first problem. Sri Sai Chand purchased gold ornaments for 2,05,000 in the financial year 2001 and 2002. That means it's a long term, more than 3 years. If an SSC held the asset for more than 3 years, it will be called long term capital asset. When sold, it will give rise to long term capital gain. During the previous year, he sold the ornaments for 10 lakh rupees. Transfer expenses 45,000. The cost inflation index in the year of purchase was 100 and in the year of sale is 348. The current previous year is 23-24 and assessment year is 24-25. The current previous year we need the index number 348. Whether it is given in the problem or not, you have to remember the current previous year index is 348. Calculate income from capital gain. So easy problem, first problem, very simple. Computation of LTCG, long-term capital gain of Sri Sai Chand for the assessment year. First of all, you should take consideration received. That means the sale price. At what price the asset was sold? It is given as 10 lakh. Transfer expenses or selling expenses 45,000. Deduct 45,000. 10 lakh minus 45,000, 955,000. Net consideration. From that we have to deduct the indexed cost of acquisition. Actually he has purchased it for 2,05,000. But we cannot compare 2,05,000 in the year 2020, 2001, 2002 and current year 10 lakh. Because the value of money will change. Due to inflation, the purchasing power of money will come down. So Income Tax Act has given the provision regarding indexing of the cost of acquisition. So how to make indexing? Actual cost into current previous year index divided by index of the purchase year. The current year index is 348 and the purchase year index is 100 given in the problem. So 2,05,000 into 348 by 100 you get 7,13,400. This is called indexed cost of acquisition. Subtract, you will get 2,41,600, that is long term capital gain. That's it. This is the first problem. See the second problem. Mr. Y.N. Charan sold his residential house for 33 lakh on 10th August 2023. Cost inflation index 348. So during the current year 23-24, he sold the asset, residential house for 33 lakh. This is the consideration received. Index number current year 348. Which is purchased on 5/11/1988 for 1,02,000. Fair market value on 1/4/2001 is 8 lakh and stamp duty value is 9 lakh. See here, in the previous class theory I told you, if an asset is purchased before 1/4/2001, the SSC can choose either the actual cost or fair market value, whichever is higher. So actually he purchased in 1988. Much before 1/4/2001. At what price he has purchased? 1,02,000. That was the actual purchase price. but it is purchased before 1/4/2001, the assessee can choose higher of the following two. Actual cost 1,02,000 or FMB on 1/4/2001 is 8 lakh. So if he choose 8 lakh, his tax liability will come down. Capital gain will decrease. If he take 1,02,000, his tax liability will be more. So Income Tax Act has given the advantage. They can take either the actual cost or FMB. FMB 8 lakh. And the stamp duty value is 9 lakh. Whenever an asset like land or building or both are sold, there will be stamp duty available. If stamp duty is there, you have to compare. FMB should never exceed stamp duty. Fair market value should never exceed stamp duty. Here fair market value is 8 lakh, stamp duty value is 9 lakh. Whichever is less, 8 lakh, that should be taken as the cost of acquisition. If selling expenses are 50,000, transfer expenses 50,000. Compute the income from capital gain and tax liability if income from other head is nil. So here in this case you have to compute the income from capital gain and also tax liability, assuming that the assessee does not have any other income. This is the only income, LTCG. Now see here, consideration received 33 lakh. He sold the building for 33 lakh. And transfer expenses given 50,000. 32 lakh 50,000 is the net consideration. From this we deduct indexed cost of acquisition. So in working note you have to write down the asset was purchased before 1/4/2001. So assessee can choose the actual cost 1,02,000 or fair market value FMV on 1/4/2001 8 lakh, whichever is higher. So 8 lakh is higher, but stamp duty value is also given. If stamp duty value is given, then you have to compare least of the two, either FMB or stamp duty. So FMB should never exceed the stamp duty, right? So here, in case of land, building or other, if stamp duty SDV is available, then FMB on 1/4/2001 should not exceed the stamp duty value. So in the present case, FMB 8 lakh, fair market value, and stamp duty value 9 lakh. So here FMB is less than stamp duty value. So FMB is the cost of acquisition. So we'll take cost of acquisition 8 lakh into indexing. Multiply with current previous year index divided by 100, because the index number starts from 1/4/2001. If any asset is purchased before 1/4/2001, you should take the index of 2001-2002, that is 100. So 8 lakh into 348 by 100, you get 27 lakh 84,000. Subtract, you will get LTCG 4 lakh 66,000. First part computed LTCG. The second part, it is asking you to calculate tax liability. Assuming assessee is not having normal income, it is given in the problem, he does not have any other income, but he is having only LTCG. So tax will be calculated after giving basic exemption. If basic exemption is there and normal income is there, then basic exemption will be deducted from normal income, not from LTCG. But if no normal income is given, no other income is given, the basic exemption will be deducted from LTCG and tax will be calculated. And one more thing, in this problem it is not given whether tax should be calculated according to new tax regime, that is default tax regime, or the optional tax regime, that is the old tax regime. It is not specified. So we calculate both, right? Default tax regime under section 115 BAC. In this new tax scheme, the basic exemption limit is 3 lakh. Whatever be the residential status and whatever be the age of the person. Basic exemption limit will differ only in the old tax regime, where non-senior, senior and super senior different basic exemption is given. Similarly, resident and non-resident basic exemption limit is different. But here, in new tax regime, the basic exemption limit is same for any type of SSC, for any residential status. Always, I suggest my students to keep running note. Keep a notebook, calculator, pen ready. Whenever I say some provision, immediately write it down, because income tax, we have so many provisions. At a time, you cannot remember until unless you note it down. So always write the provisions when I'm explaining, right? Now, default tax regime. LTCG special income is 4,66,000. Why it is called special income? Because flat rate of tax is there. Slab system will not apply. For normal income, slab. For special income, flat. So, say 4,66,000. Basic exemption limit is 3 lakh under new tax regime. Subtract 1,66,000 is a taxable LTCG. Now, tax on LTCG is 20%. The 20% flat rate is same for old tax regime as well as new tax regime. The tax rate is same. So 20% of 166,000, 33 to this add 4% health and education cess compulsory. 1,328. Add up 34,528. But according to the provisions of IT Act, it should be rounded off to the nearest 10. So 28. Instead of 28, we take it 30. Right? 34,530 is the rounded off tax liability. In the default tax regime, new tax regime, if we go for old tax regime, optional tax regime, then LTCG. If you are not sure about this default tax regime and old tax regime, I suggest you to go to the first video which I have prepared, tax structure, in this assessment year. In this assessment year 24-25, I have given a separate video on tax structure. In that I have explained this default tax regime and old tax regime. So LTCG 4,66,000. Basic exemption is 2,50,000. Assuming the SSC is a non-senior citizen below 60 years of age. That is the assumption. 2,50,000. 2,16,000 taxable LTCG. Tax 20% of 2,16,000, 43,200. Add health and education says 4% on 43,200, 1,728. Tax liability 44,928. Round it off 28. Instead of 28, we can take 30, 44,930. That is the tax liability according to the old scheme. So I have completed problem number 2. Now problem number 3. Srimati Ganga Bhavani purchased a residential house for 5 lakh in 1997-98. That means before 1/4/2001. At what price she has purchased? 5 lakh. During the year 2003-2004, she constructed 2 rooms at a cost of 2,18,000 on 15th May 2023. So she has improvement. Actually, she has purchased a house for 5 lakh. Later on in 23-24, she added 2 more rooms. That is called improvement. So how much cost is incurred? 2,18,000. So we must deduct indexed cost of acquisition and indexed cost of improvement. On 15th May 2023, she entered into a contract with Dr. Hari to sell the house for 22,30,000 and received 75,000 as advance. Later on, Hari decided not to purchase the house and advance received was forfeited on 12th December 2023. Now see here. Income Tax Act has given one provision. If advance money is received and later on the transaction was not completed, advance money forfeited should be deducted from the cost of acquisition if the advance money was forfeited before 1/4/2014. This is the date you have to remember. If the advance money is received and forfeited before 1/4/2014, then that advance received should be deducted from the cost of acquisition and then indexing will be done. But if the advance money is received and forfeited after 1/4/2014, the advance money received forfeited should be taken under income from other sources and it will be taxable along with other incomes on slab system. It should not be deducted from the cost of acquisition. So you have to see when the advance money was forfeited. Is it before 1/4/2014 or after 1/4/2014? In our present problem, the advance money received and forfeited after 1/4/2014. So that advance money, 75,000 rupees forfeited, that 75,000 should not be considered in LTCG. That 75,000 should be taken under income from other sources. That is the point. Now, she sold the house for 30 lakh. During the current year, she sold that house to another person for 30 lakh. Selling expenses 2%, transfer expenses. Calculate the income from capital gain and tax liability under default tax regime. Remember, default tax regime means new tax regime under section 115 BAC. Specifically given, if income from other head 6,30,000, the cost inflation index for 2003-2004 when improvement was made was 109, and 23-24 current previous year index is 348. That's it. Understanding the problem is half solved. So that's why with keen observation, you should see, you should listen the contents of the problem. And I told you about the advance money received and forfeited. There you should not commit any mistake. Now, here, Srimati Ganga Bhavani, consideration received 30 lakh. The sale price is 30 lakh given. And 2% is the transfer expenses, selling expenses. So 2% of 30 lakh comes to 60,000. Net consideration 29 lakh 40,000. From this to indexed cost of acquisition and indexed cost of improvement. In this problem, the asset was purchased before 1/4/2001, but FMV is not given. Fair market value is not given. So we take the actual cost. If fair market value would have been given, we have to compare the actual cost with fair market value, whichever is higher, that should be taken. But in the problem, FMV is not given. So we take the actual cost. Actual cost is 5 lakh into 348 current previous index divided by index number of the year of purchase. If any asset is purchased before 1/4/2001, the index number of purchase year should be taken as 100. Make it a note. Write it down. Any asset purchased before 1/4/2001, 100 is the index number. So 5 lakh into 348 by 100, 17 lakh 40,000. This is the indexed cost of acquisition. Now, indexed cost of improvement. During the year 2003-2004, she added 2 more rooms by incurring 2,18,000. Again, indexing 348 divided by 109. 109 is the index number for the previous year 2003-2004 given in the problem. 2003-2004, 109, right? So 2,18,000 into 348 by 109, 6,96,000. This is the indexed cost of improvement. Now multiply 6,96,000. Now take the total, 17,40,000 plus 6,96,000. 24,36,000 is the total. Subtract. 29,40,000 minus 24,36, you get 5,04,000. So LTCG will be 5,04,000. 504. That's it. We have computed the long-term capital gain. Because we have to compute the tax liability also. So we need to calculate tax on normal income and also on LTCG. This is a special income, flat rate of tax, 20%. So first of all, income under other heads is 6,30,000 given in the problem. Given in the problem, 6,30,000 other heads. Apart from that, advance money forfeited after 1/4/2014, that will also be treated under income under other sources. So advance money received and forfeited after 1/4/2014, 75,000. In examination, in working note, you should write down this point, what I explained about advance money forfeited. After 1/4/2014, other sources. If it is before 1/4/2014, it should be deducted from the cost of acquisition before indexing. Now, the total normal income is 7,05,000. Now we need to calculate tax on this 7,05,000 on slab system. according to new tax regime, default tax regime. So tax liability and default tax regime, tax on normal income of 7,05,000. Separately we have to calculate. Because on normal income slab system and on LTCG flat rate 20%. So here first we calculate 7,05,000. Slab income rate tax. Now again I suggest you go to the playlist of my channel, select the video on tax structure for 2024-2025 current assessment year. I have explained you the detail regarding this tax rates, different slabs. The first slab up to 3 lakh. Basic exemption limit is 3 lakh, right? No tax will be there. So up to 3 lakh, income 3 lakh, rate nil, tax nil. The second slab goes from 3 lakh 1 rupee to 6 lakh. From 3 lakh 1 to 6 lakh, the income is 3 lakh. From 3 lakh 1 to 6 lakh, the income is 3 lakh. The rate of tax is 5%. So 3 lakh into 5%, you get 15,000. Now next slab goes from 6 lakh 1 to 9 lakh. The rate of tax is 10%. But our income is not going up to 9 lakh. So we are not taking the complete slab. What is our total income? 7,05,000. From 7,05,000 subtract these two. 7,05,000 minus 3 lakh minus 3 lakh. So 1,05,000 is the balance. On this balance 10%. The first slab 0%. This is 0%. Second slab 5%. The third slab is 10%. So 10% of 1,05,000, 10,500. Add up both, 25,500. So 25,500 is the tax on normal income. So tax on normal income 25,500. To this we add tax on LTCG. The long-term capital gain is 5,04,000. On 5,04,000, 20% flat rate. So 20% of 5,04,000, 1,08,800. Add up both, 1,26,300. Then health and education cess, that is a mandatory compulsory health and education cess 4%. So 4% of 1,26,300. You will get 5,052. Add up 1,31,352. Now we have to round it off. Last 2 is there. So leave 2 and make it 50. Instead of 52, make it 50. So 1,31,350. That is the rounded off tax liability. So I have explained each and every point in so minute detail. So watch the video not once, twice, thrice. Get the complete command, confidence in yourself to write excellently in examination. So if you are satisfied, give a like to the video, share my channel, subscribe if you have not yet subscribed. What I have seen, very few subscribers. That means the viewers are more than double the subscribers. But I don't know why students are not coming forward to subscribe. Please do subscribe, it will motivate me so that more and more videos I can be able to make for your benefit. So inshallah we'll continue the next problem in the next video.